Alright guys, so we have a lot of work to do in a very short amount of time. Yes, AMC stock was down 9% today and we broke under the 200-day moving average. But something is happening in the markets. It's not just AMC, it's a lot of other long duration stocks. Think about long duration like you invest in a company you think is going to be the next Amazon. It's going to take a long time for that Palantir or whatever company that is to become an over $1 trillion company. And those long duration stocks tend to have higher valuations because there's higher expectations for those stocks. Like a Coca-Cola, very mature company, valued a lot lower than something like a Palantir or something like a Peloton, right, during 2021, a long duration stock. Now, what is happening right now is those long duration stocks are falling in a very dramatic way. AMC is one of them, BBBY, all of these long duration stocks have fallen today. SoFi, DraftKings, Affirm, some of the stocks that I personally own, they were basically all down today, and the markets were slightly green. Even the Russell 2000 was green on the day. So what is going on and why are these stocks plummeting? I think it's pretty clear to see that the markets are going to come down in a big way. I'm not sure if it's tomorrow, but we do have a big event that happens next week, and that I think will be key to all of this, because as you guys do know, we got the FOMC minutes that came out on Wednesday, and really nothing crazy happened from that. The overall consensus was the Fed has a lot more room to raise rates. The labor market is healthy, and actually way healthier than they would have thought it would have been. So there's room to raise rates, and essentially they're going to go off the data and a lot of things that we already know. But at the time this FOMC minutes actually happened, the stock market was actually sitting at a low, so there was no questions about the valuation. The Fed didn't come out and say, yeah, things are still overvalued, they're undervalued. We didn't get any comments like that. But the markets have rallied over 10% since the last FOMC meeting. And I think the markets understand that that FOMC minutes was really out of date now, considering the rally that we have seen. So what's going to be the next big catalyst coming next week? It's going to be Jackson Hole Septorium, I believe it's called. It's basically where global Federal Reserve leaders, right? The central bankers from different countries come together, share their thoughts about economic growth, about inflation, about monetary policy, all of that. And it's a big event every single year. Last year, it was a big event. Fed Jerome Powell went out there and basically reiterated that they are not even thinking about raising rates. 6 months later, they started to raise rates. So nonetheless, take it with a big grain of salt what is actually said, but the markets, they react to it. So essentially what the markets are looking forward to coming at this next Jackson Hole meeting, which is going to be next week, is what is the Fed going to do next, especially now that the stock market has went up in such a dramatic way since the last time we have heard from Fed Jerome Powell. I will tell you right now that Fed Jerome Powell, he basically went off script and said that they're going to slow down raising rates at some point, right? That's a given. The markets took that and ran with it. And that's why we're up so much from the last Fed meeting that we did have. So I don't think Fed Jerome Powell wanted the stock market to rally this aggressively, this fast. I don't think he would mind if inflation was coming back down to, 5 or 4%. The Fed still needs to get inflation down to 2%. And if everyone feels richer because financial conditions have loosened because the stock market has went up, well, that is not a bullish thing. That is not a good thing. I will repeat, the stock market going up right now is not good for the Fed's ambitions. But as far as what we heard today, this is more reiteration that the Fed has room to continue to raise rates at possibly an even more aggressive pace. And it says jobless claims edge lower as Fed looks to cool the labor market. Jobless claims totaled 250,000 for the week ending August 13th, down 2,000 from the previous week and below 260,000 Dow Jones estimates. Continuing claims, which run a week behind the headline number, total 1.43 million, an increase of 7,000. In other economic news, the Philadelphia Fed reported that its monthly manufacturing survey for August rose to a reading of 6.2. So a little bit of a mixed bag there, but the overall consensus is the economy is strong enough to withstand rate hikes, and especially the jobs market. So coming next week, I think that's when you could see some more downside for the markets, and I do think that is why a lot of high growth stocks, SoFi, AMC, DraftKings, Affirm, all these stocks that a lot of us have positions in, have been dropping so much over the last 2 days. Even something like an Apple, which has the largest weighting of the S&P 500 by far at over 7.25%, was down 0.23% in regular trading and down 0.06% here in after hours. So I think it's clear that the high growth stocks, they're the first ones to go before it really affects the S&P 500 at all, because they don't really have a market weighting in the S&P that's more than like 1%, right? It's a very, very small weighting of the S&P. And then you'll start to get the big movers like Apple, Microsoft, Amazon, Google that probably will head down next week as we do get to that Jackson Hole event. Now, on a technical basis, we're finding a lot of resistance around the 200-day moving average, pretty much bouncing off of that intraday really over the past 2 days, 3 days, 4 days, you could say that. We did break above that actually here. This was August 16th, and we actually did close above this moving average as well on that day. And it was a pretty ferocious breakthrough, and then we have struggled to hold above that ever since. So I do think it's looking like a little bit toppy, and it looks like we might find some resistance around that 200-day moving average, a level in which we have not been above since April of 2022. Beyond that, you were not above it since February of 2022. Even the 150-day moving averages, you got to go back to January to be above those, which we are above those, and it has been a very parabolic rally, a more aggressive rally to the upside than what we even seen after the Fed came out and bailed the markets out after the COVID crash. So with inflation 8.5%, with everything else going on in the world, yeah, it doesn't seem logical that this rally can continue to sustain itself. If the Fed does magically come out and say, hey guys, we're going to slow down raising rates, and we might do it at an aggressive pace, well, that would be justification of this rally. I simply don't think that's going to happen with 8.5% inflation. And long story short, if you didn't understand anything out of that whole spiel, if you're still wondering what Jackson Hole septorium is, I'm not sure if I'm saying that right, then basically we're probably going to get some downside next week, because the Fed's not going to be so nice to the markets, and the Fed will try to talk down this market rally that we have seen, and that's likely why stocks like AMC, SoFi, DraftKings, Affirm have been falling so much over the last couple of days. In regards to the Ortex data behind AMC stock, the short positions are worth $2 billion US. The estimated short interest of free float is 18.18%. The free float out on loan is 27.12%, and the shares out on loan is about 140 million. Days to cover is sitting at 3, cost to borrow at about 9%, and 100% share utilization. The cost to borrow max sitting at about 11%. And now, the data here might not look too encouraging to a lot of people, but still, you have to remember these numbers are very high relative to what normal numbers should be. You could basically pull up any stock that's a Tesla, Microsoft, Apple, or any normal stock. I mean, those are not really anything special. They're just companies, right? Those numbers are going to look a lot different. Probably negative cost bar minimums, cost bar max at 2%, cost bar average at maybe 1%, right? So you're 8 to 10 times higher still with these cost bar max and cost bar average numbers than what a normal stock is sitting at. So that is still showing you elevated levels of volatility. Now, as far as the options, you have seen 117 orders for the day, worth $11.53 million, positive order value of 20%. So not a very bullish week as far as the option activity is concerned, but keep in mind we still do have tomorrow, and that could definitely change some things around, and there is a possibility to see a pretty green day tomorrow in my personal opinion, based off of especially what we're seeing with the option activity. So we have about 21,000 calls that are currently in the money, 241,000 calls that are out of the money. The premiums are now very low on these options as there is only 1 day left to expiration, and a lot of contracts would become 100% worthless. If you do see a big move in AMC stock, or you do see the meme stock resurgence, AMC could definitely benefit due to the almost 245,000 options that are currently out of the money. At the same time, there's a lot of puts that are in the money, 77,000 to be more exact, and the out of the money puts sitting at about 66,000 contracts. So there is a possibility to see a pretty big move tomorrow if we can get a bullish sentiment for AMC stock coming tomorrow. Now, as far as the Fed rate monitor tool, now 40% of market participants are expecting a 75 basis point rate hike. This comes after a couple key Fed speakers today, Fed Wallard, and there was actually a comment from Fed Bullard that said that they're nowhere close to done raising rates, that the target federal funds rate right now is 2.5%. The Fed said they need to get that up to 3.75% to 4% by the end of this year. So that would imply more 75 basis point rate hikes to come, and that's why the previous day probability was only 28% for a 75 basis point rate hike, and now it's sitting at 40%, and the chances of a 50 basis point rate hike currently sit at 60%. So all in all here, you know, the markets are getting a little bit more comfortable, I'll say, or starting to price in with a little bit more certainty that 75 basis points might be a possibility. The comments that Fed Powell made at the last Fed meeting did not suggest that they will do 75 basis points at the next Fed meeting, and that's why you have seen a lot of that bullish momentum in the markets. And even the fact that we're topping out around the 200-day moving average is something I'm paying very, very close attention to. If we had broke through on August 16th and continued higher after that, that would have been a very bullish sign. And I stated publicly here on this channel that if that were to happen, we're likely in a bull market, and this is not a bear market bounce. If we get rejected and fall under, let's just call it around 420 on the S&P, well, it looks like this might be a bear market rally. It looks like we might be due for some more downside, and especially how much we have ran in such a short amount of time, it looks like it's the case. This would be the quickest reversal of a bear market in stock market history if we continue to the upside, break above the 200-day moving average, and go into that bull market. So as far as tomorrow, like I said, there's not a lot of economic data, really nothing that is scheduled that is going to move the markets in a big way. Nothing for U.S., economy, really nothing, right? We have gotten that data throughout the week already. So really the main focus is going to be what to expect for the Jackson Hole event that does start next week. Multiple day event. Starts next week. I believe it starts on Tuesday. Could be wrong in that. I'll get you guys more accurate information as far as that is concerned. But nonetheless, I think we're in for some more market downside. And probably, if I were to imagine, you've already seen most of the downside with AMC stock. So that might be a little bit more reassuring. And as far as a quick look at the technicals, we're not going to take too much time looking at this because they don't look very good, to be honest. The 200-day moving average, we broke cleanly above that or below that today, which is a sign that that is not going to be a support level unless we somehow bounce above that coming tomorrow. That would be a very bullish thing, but I'm not going to hold my hat to it. Next level to watch is 1838. That I've had this line drawn for a very long time. It was the peak of this rally before this last rally, so you definitely want to watch that for a support level. That's going to be your best case scenario, is you probably get a bounce off of that 1838. To just reiterate that again, 50 and 100-day moving averages, if we get a lot of market downside, you know, tomorrow or over the next week, that would be the next level to watch, around $16 flat for both of those moving averages. And that's really as low as I would expect to go unless we get, you know, another 10, 15, 20% downside in the stock market, in which that would be hitting new lows for 2020. The RSI is at 49.77, so under that neutral level of 50, just barely, looking pretty neutral overall, though the MACD did go bearish on the day. So you have definitely seen a flip in sentiment around just a lot of momentum stocks. It was not just AMC, but I don't necessarily think the whole thing is over. I think these momentum stocks could be a rush to safety maybe when the stock market does start to come down, and that's probably why they have taken the beating first compared to the broad market. So that is going to be all for this video. Hit that like button and subscribe to the channel if you guys have not already. Source your comments, questions, or concerns down below in the comment section. Get your free stock with Webull, Moomoo, and Public. And if you guys want to come trade with me live in real time, link down below in the description. You guys enjoy the rest of your day, and I will see you in the next one.